Everyone thinks you need a large portfolio and 20 different stocks to make weekly income, but I'm going to show you two of my favorite stocks that can pay you handsomely every single week selling cash secured puts. In fact, I've been running cash secured puts on these two stocks successfully every single week within my private Discord community, the Launchpad, and these two tickers have delivered consistent and steady premiums week after week. Today I'll break down why these two stocks are perfect for generating weekly income selling cash secured puts, whether you're a small account or a decent size account. Hi, my name's Gautam, and on this channel I talk about the stock market and achieving financial freedom with the power of options trading. So if you're someone who wants to build consistent income and take control of your financial future, make sure to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world and are simply looking to fast track your learning and avoid costly mistakes, click on the first link in the description below for one-on-one coaching with me, or to join my Discord group where you get weekly trade alerts, learn how to open, close, and roll trades, master risk management, and even have direct access to me for any questions or guidance. Now, just a quick disclaimer before we get started that this video is for informational and educational purposes only and should not be considered financial advice. I'm not a financial advisor, and I'm simply showing you my trades and how I trade. With that said, my first pick is SoFi Technologies, and for those not familiar with SoFi, SoFi is a fintech company, and if you check out their website right here, they're in the business of personal loans, banking, you have mortgage loans, student loan refinancing, investing, home equity loans, credit card offers, and recently they also just launched crypto. So if you check out their website right here, they mentioned that they're the first and only national consumer bank with crypto. So next, let's talk about why I like SoFi. If you look at their financial performance, SoFi reported adjusted revenue of $950 million, a 38% year-over-year increase driven by strong performance in its financial services segment. The company also beat analyst expectations with non-GAAP profit of 11 cents per share and raised its full year earnings guidance. SoFi added 905,000 members in Q3, bringing its total membership to 12.6 million, a significant increase from the previous years. We just saw on their website that SoFi is actually the first nationally chartered US bank to offer in-app crypto trading, allowing customers to buy digital assets directly from their accounts. A new partnership with Lightspark will also leverage blockchain technology for faster, cheaper, and more transparent international money transfers. If we talk about stock performance, SoFi has significantly outperformed the S&P 500 with returns up over 118% over the past 6 months. So if we check out SoFi's chart right here, as of today, it's up 92% year to date, and in the past 1 year, it's up almost 87%. Looking at earnings per share, SoFi has consistently beaten earnings per share quarter over quarter. As you can see, this is Q4 2024, all the way through Q3 2025. It's been beating analyst expectations consistently, and basically that's one of the things that I look out for when choosing a stock to sell cash secured puts. If you look at revenue and earnings, it's the same story, consistent growth quarter over quarter, whether it's the revenue or the net income. SoFi's revenue went from $739 million in Q4 2024 to almost $949 million in Q3 2025. So that's solid growth. Also, if we compare the earnings year over year, earnings went up from $61 million to $130 million. So that's a little more than double the earnings in just a span of a year. That's a strong indication of a company that has shown consistent growth, not only with bringing in more people to its platform, but also increasing its revenue and net income, which is a bottom line. If you look at SoFi, it's currently trading at $29.60, so much higher than the average price target, but we have a high price target of $38, and I definitely believe SoFi can get to the $38 price point by sometime next year if we do get the potential interest rate cuts that are in pipeline for the next year, because over 60% of SoFi's revenue comes from its lending services, which are probably going to see a big boost with a decline in interest rate cuts again if we get them next year. Talking about interest rates, if we look at the CME FedWatch tool, they're reporting an 89% chance of an interest rate cut when the Fed meets next week on December the 10th for the FOMC meeting. So I believe if we do end up getting this interest rate cut as expected, then that should certainly provide a big boost to the SoFi stock. And if those weren't enough reasons to consider the SoFi stock, we have an article from Truist saying that these three stocks are likely to join the S&P 500. So Truist goes on to say that it is possible that SoFi, Affirm, and Toast could be added to the S&P index in the near future. According to them, Affirm and SoFi meet all the criteria while Toast is marginally below the market cap threshold. They go on to say that the S&P 500 additions can provide a meaningful boost to the stocks given the mechanical buying by index funds and benchmark tracking strategies. I'm recording this video on Wednesday, December the 3rd, and if you look at the next S&P 500 inclusion date, that is December 19th, 2025, which is the third Friday of the month, which is when the quarterly rebalancing takes place. So again, I'm going to keep my eye out for December the 19th, and obviously before that we also have the FOMC meeting on December the 10th, and hopefully if we get an interest rate cut on December the 10th, and right after that on December 19th, if SoFi gets inclusion in the S&P 500, those two events should be enough to give a big boost to the SoFi stock in the days and months to come ahead. Now looking at SoFi's 6-month chart, it's currently trading in between the top and the middle of its Bollinger Band. And for those not familiar with the Bollinger Bands are a technical analysis tool that I utilize to help me decide good entry and exit points for my trades. So 95% of the time, the stock generally trades in between the Bollinger Bands. In instances like here, where it jumped out of the Bollinger Band, it quickly came back up and then continued to move inwards. Looking at some support levels for SoFi, the first level of support that I see is right at the middle of the Bollinger Band. Now, the middle of the Bollinger Band is actually too close to the current price of SoFi, which is around $29. So the next level of support that I like for SoFi after that is this 100-day moving average right here. It's around the $26 mark. As you can see, back in October, it came around this level, and then again right here, this is close to the $25 level. So in between the $25 to the $26 level is a strong support level that I like to sell cash secured puts on SoFi. Now I'm recording this in the middle of the week. Today is Wednesday, December the 3rd. I'm going to go out to the next week, which is about 9 days out from today. And let's look at the options chain and see what kind of premiums we can collect. As I said earlier, I like the $25 to the $26 support level. So let's look at the options chain. Now the $25 strike price is a delta of 8, meaning that there's an 8% chance of SoFi getting to that price point. Now, anytime I like to sell cash secured puts, I target a delta of 15 to 20 depending on the stock and how volatile it is. Generally speaking, the lower the delta, the less chances of the stock getting to that price point. And the higher the delta, the higher the chances of the stock getting to that price point. So keeping those things in mind, and depending on how volatile the stock is, I choose my delta accordingly. So SoFi is a strong company, and I don't mind going slightly aggressive with my delta selection, but also keeping in mind the support levels. So if I choose the $26 strike price, this is a delta of 14. And right now going with the $26 strike price would provide us a return of 0.95%, almost a 1% return in 9 days. If I go with the 26.50 strike price, this is a delta of 18, and this gives us a slightly over 1.2% return on our capital. So I actually like this 26.50 strike price because it's a good balance of safety and return on our capital. So going with the 26.50 strike price, I would collect about $32 per options contract. And again, one options contract represents 100 shares. So let's talk about what happens at expiration. So if SoFi stays above 26.50 at expiration, then we get to pocket 100% of this premium that we collected at the time of opening this position. Now, in case SoFi drops below 26.50, then we'd be assigned 100 shares per options contract that we sold at the 26.50 strike price. Another reason why I really like SoFi is that if we went ahead with the 26.50 strike price, would only cost us $2,650 in collateral. So whether you're a small account and just getting started or a decent size account, SoFi is a fantastic stock that offers you great premiums without requiring a ton of capital compared to some of the other stocks that offer the same return and require a large amount of capital. My next pick is actually not a stock, but an ETF, ticker symbol TQQQ. Now, TQQQ is a leverage ETF that gives you 3x leverage to the daily movement of the QQQ or the NASDAQ 100 index. So let's talk about why TQQQ. So firstly, it gives you 3x leverage to the QQQ. So that means if QQQ moves up by $1, TQQQ would amplify that move by 3x, whether it's to the upside or it's to the downside. Another reason why I like TQQ compared to some of the individual stocks is that it does not require a lot of capital. So let's look at an example. Let's say you like Microsoft and would like to sell one cash secured put on Microsoft. So Microsoft is currently trading at $479, And let's say we go out a week to the December 12th options chain, and let's say we go with the 465 strike price. Now this is a delta of 22, meaning that there's a 22% chance of Microsoft getting to this price point by next Friday, which is December the 12th. And then as you can see, if we sell one cash secured put at the 465 strike price, we would collect a premium of $2.64. So because one options contract represents 100 shares, we would multiply that by 100. So we would collect $264. But here's the issue: to sell one cash secured put at the 465 strike price would require a collateral of 46,500, again because one options contract represents 100 shares. So you would just take the strike price and multiply it by 100 to come up with the collateral required. So again, not everybody just sitting out there with a 50K account. And even if you had a larger account, to sell one put for 50K is still quite a heavy chunk of change. So comparing Microsoft to TQQQ, TQQQ is only trading at $55. So even if I were to sell one put option at the $55 strike price, it would only require $5,500 in collateral compared to almost $47,000 in collateral. Now, another reason why I like TQQQ is because of the diversification. If you look at the top 10 holdings for TQQQ, we have Nvidia, we have Microsoft, Apple, Broadcom, Amazon, Tesla, Meta, we have Google Class A, and we have Google Class C, and then we have Netflix. So I like the fact that TQQQ gives you a lot of diversification, meaning any bad news related to one single stock won't take a big toll on your position, because not only do we have a lot of diversification, but we have a lot of AI players in the mix, which ends up providing you a lot of stability for your position. So also checking out the last 30 days return from November the 5th through December the 1st. The blue line here is the QQQ, which is the NASDAQ 100 index, and the dark green line here is the TQQQ. So as you can see, on November the 5th, we had a daily return of 0.72% on the QQQ, and in comparison, TQQQ gave us a daily return of 2.13%, which is again about 3x amplification to the QQQ return. Also notice on November the 6th, when the market was down and QQQ was down 1.92%, TQQQ was actually down 5.77%. So that is something to consider when you open a position in TQQQ, is that not only does it amplify the upside, but it also amplifies the downside. So that means that the moves are going to be larger. TQQQ is going to be more volatile. And obviously you're compensated for that by the rich premiums that you collect by selling cash secured puts on TQQQ. Now looking at TQQQ's current chart, it's trading right in between the top and the middle of the Bollinger Band. And the first thing I do before selling cash secured puts is to look at levels of support. So I see a strong level of support back here in October at the 48.50 strike price. And in November, QQQ did break the 48.50 strike price. But then as you can see right here, that was the bottom of the Bollinger Band. So it quickly jumped back up, and it has been going up aggressively since then, along with the rest of the market. If we look at these support lines right here, we have at the 49.50 strike price, we have the 100-day moving average, which is also a strong level of support. So keeping those support levels in mind, let's pull up the options chain, and I'm going to go out again to the December 12th options chain, which is next Friday. Knowing that TQQQ is a 3x leverage, it can make larger moves both on the upside and on the downside. So keeping that in mind, anytime I sell cash secured puts on leverage ETFs, I go with a lower delta that I would compared to a normal stock. So let's look at some delta selections right here. I see that we have a lot of open interest and volume at the $51 strike price, and this is a delta of 18. I also see a lot of open interest and volume at the $50 strike price. So the $50 strike price is a delta of 14. And if we sell one cash secured put at the $50 strike price, it would require $5,000 in collateral, and then we would collect $43 for selling one cash secured put at the $50 strike price. Now, another thing I like about the $50 strike price, besides the fact that it has a lot of open interest and volume, meaning that we have a tighter bid and ask compared to some of the other strike prices. The other thing I like about the $50 strike price is that it gives us a 0.88% return on our investment, which if I were to multiply that by 4 weeks, that's almost a 3.6% return in slightly over a month. Now, keeping in mind, this is not exactly 7 days out, it's about 9 days out. So even if I were to discount that 3.6% for over a month and let's assume that we collected 3%. This is still a fantastic return because you only require $5,000 in collateral to sell one cash secured put on TQQQ, and you end up making a fantastic return on your investment, which is 3% or higher. So again, I love TQQQ, and TQQQ is one of my regular to-goes to sell cash secured puts for weekly income. So that's it for this video. If you enjoyed it or learned anything useful, please give it a thumbs up, subscribe to my channel, and comment down below with your thoughts or questions. If you would like one-on-one coaching directly with me or be part of my Discord community, click on the first link in the description below, and I'd love to help you out.